What's going on, guys? If the title or the thumbnail didn't give this video away already, we're gonna be talking about DRIP, or Dividend Reinvestment Plan. Now, I'm not kidding when I say this, but when it comes to DRIP, that is the difference between you becoming a millionaire and a multi-millionaire. DRIP is probably one of the best things you could do for yourself, whether you're 20, 30, 40, 50, or okay, maybe not 50 or 60 years old, but when you're younger, it is very crucial for you to do this, especially if you're investing in dividend-paying stocks. And I'm talking about any dividend-paying stocks, whether it's growth stocks, just regular dividend-paying stocks. If you're invested in REITs, it doesn't matter if it's paying you some kind of dividend and you're not tapping into your investment portfolio yet to live off of, you better have DRIP on. So now you might be asking, what is DRIP? There's no better way to explain it other than Investopedia. And you can see right here on Investopedia, Dividend Reinvestment Plan, DRIP definition. A dividend reinvestment plan is a program that allows investors to reinvest their cash dividends into additional shares or fractional shares of the underlying stock on the dividend payment date. So we now have a pretty good understanding of what dividend reinvestment is, and I'm going to show you how to turn DRIP on in TD Ameritrade. So if you have TD Ameritrade, make sure to watch this video to the end. We're going to learn exactly how to turn on. It's very simple, but before we get to that, I really want to stress why is dividend reinvestment plan, why is DRIP so important? This is something that you need to understand, and I'm going to show you on the computer really quick the difference between not having DRIP on and having DRIP on. So here's why dividend reinvestment plans, or DRIP, is so important and why it can make you so much money if you have it turned on. If we jump over to the computer and we have, say, $1,000 invested in whatever, whether it be an ETF or a stock, right? Let's pretend it's the S&P 500. Over the course of 75 years, 10% interest or 10% annual return, we could turn that into a little over $1 million. Now, let's say we have DRIP on, which means all of our dividends are being reinvested back into the S&P 500 or whatever our portfolio is. So we're gonna use a really conservative number when it comes to dividends. I know everyone likes to look for that 4%, but let's play it really conservative, and let's say we're making 2.5%. That's very easy to achieve. There's some stocks out there that have been paying over 4% over the course of 30, 40, or 50 years. So here it is. If we look on the computer again, 12.5%, right? 10% was 1.2 million, 12.5%, 6 million. That's the difference between becoming a millionaire and a multi-millionaire. Just a few more points added to your annual return can make a massive difference over the long run. I was trying to look for this article, and it's something along the lines of, and you may have heard it before, the S&P 500, 90% of its gains are from its dividends, or some crazy number like that. So we're gonna look at some crazy numbers over here, which you can easily do this on TradingView. Just take whatever kind of dividend stock that you want to invest in, and you can actually compare the difference between how much it is made without DRIP and with DRIP on. And it's, well, let's take a look at the computer. And here is AT&T, ticker symbol T. You can see AT&T over the course of 36 years, right? This is back from 1984 all the way to 2020, has had a pretty good run up. And here, let's first do this. You can see it's only $28 right now. It did have a high of $59, but it started all the way down here in $4. Right? So if we go down here to toggle percentage, we turn that on, it shows how much you've made over the course of, this is 36 years. It would be almost 500%, okay? A little less than 500. We'll pretend it's 500 just to make numbers easy. That's about over 13% return a year, which that's pretty good. I'm not complaining about a 13% return a year. If I could be promised that over the course of the next 30 years, I'd be really happy. But here's where it gets exciting. If we look at right over here, adjust, data adjusted for dividends. If we click on this, This is adjusting the data if you were to take every dividend that you made from AT&T and reinvest it back into the company. And here's the difference. Remember, without it is 500%. With it, over 3,000% over the course of 36 years. That is 90%. That's over 90% return a year from reinvesting your dividends. And that's 90% return from your initial investment. All right, that's if you just dropped whatever, $1,000 36 years ago and never touched it, right? That's how I'm getting these numbers. But we could look at different examples. Think of stocks. How about, if we are in AT&T, how about Target? Target is a dividend king, okay? And I don't know why I have this line here. Must have been doing something back then. But 200%, if we go all the way back to its inception, it's up 20,000%, which is incredible. We adjust for dividends, 52,000%. So now let's get to the last part, and that's what you came here for, and that is how do you turn on your dividend reinvestment plan or your DRIP, whatever you want to call it. So let's jump over to TD Ameritrade. And here's my TD Ameritrade. You're gonna click on account and you get this drop down menu. And it's very simple. You go down here to dividend reinvestment. You click on that and it just kind of goes over the overview and all of that good stuff. And depending on what you have, whether it be stocks and ETFs or mutual funds, so I have stocks and ETFs. So we're gonna click on that to edit and enroll. And then here's all of my stocks. Now, only half of them pay out dividends right now, and they are very small, but they're all growth dividends, right? So we got 7 right here, and 7 of them don't. But you could go to edit enrollments, and I just have this checked off. Automatically enroll all current and future eligible stocks and ETFs in DRIP. So every single one is checked off. Even the ones that don't have dividends are checked off, and I'll tell you why in a second. But let's look at Intel, because Intel is my biggest dividend stock, 2.59%, and I got 40 shares. And then you can see what I get right over here. So every single time I get paid, it goes right back into Intel. That's why I have 40.205 shares. Microsoft, I have 11.017 shares. These are all of the dividend reinvestments going to work, all of these decimals. So over the quarters and over the years, I'll be getting shares for doing nothing, for just my dividends going right back into it. And what's great is just like with compound interest, we all know how compound interest works, right? Interest, simple interest, straight line going up like that, right? Compound interest has that exponential curve. So that's gonna be the same with dividends. If you don't have dividend reinvestment on, you'll get paid out your dividends and it'll slowly go up if it's a nice dividend growth stock. But if you turn on that DRIP, you will have a compounding effect with your dividends because you get paid that one dividend, and now that dividend, you get paid a dividend, it goes into the stock, and now that fraction of a stock will get a fraction of a dividend. And then that fraction of a dividend will get an even smaller fraction of a stock, and it just keeps on adding up, and it'll end up being that exponential curve as well. And you could see the reason why I have all of these on as well, Adobe, Etsy, Facebook, Netflix, PayPal, Shopify, and Square, is what if they start paying out dividends? I don't want to miss anything. What if Facebook in 10 years starts paying dividends because they're just cranking out so much money, which they already are? I want this already checked so I don't even need to worry about it. And right away, that dividend's already going to work and being reinvested into Facebook. So that's why I even have the ones that don't pay dividends yet. I say yet because every company, I believe, should eventually pay out dividends after they've been in business for 20, 30, 40 years. But that's all I got. That is Dividend Reinvestment Plan, DRIP. You now know how to set it up on the computer. You know the potential, how much money you can make. It's the difference between becoming a millionaire and a multi-millionaire. If you like this video, Smash that like button, subscribe if you haven't already. If you have any comments, drop it below. And as always, I will see you guys in the next one.